Good day, good day. I hope you all good. I hope you all good. So what I wanted to explain today is the fib. Right. So on the fib, we only use it when the market is trending. If the market is in a trend, we can use a fib. If the market is in a range, personally, I don't use the fib in a range. I don't use a fib here. If the market is choppy, I don't use a fib as well. I only use it if the market is in a trend. The other thing is moving averages. I only use moving averages when the market is in a trend. If the market is in a range, I don't use moving averages. If the market is choppy, I don't use moving averages. So I'm just going to start with an example which we shared today, and I'll explain it fully. So the thing is, I had a selling bias. The thing is, it comes with bias for you to identify the trend, right? So I'm just going to be fast on it. So if you look at the daily, I'm just going to let me actually remove the fib here so that we can see clearly. So from the daily, you can see we are trading below the 13 EMA, right? I'm using a moving average here because price is actually showing that there is movement of price. So since we are below the 13 EMA from the daily, automatically I've got a sell bias also based on how the current daily candle was. It did a nice rejection of the 13 EMA there, which gave me my bias, right? So as long as I've got bias, usually I don't use H4. If I've got a bias, I automatically jump into my trade. But what I want to highlight here is basically here we're looking for a downtrend, right? So it's lower highs and lower lows, lower highs and lower lows. As long as you see a lower high and a lower low after a structure has been broken, you can run your fib from the high to the low. Personally, I use from the top of the week to the bottom of the week. Same applies here, run your fib from here to here. Then as the price is retracing, your first entry point will be the 38.2 all the way to 70.5% fib retracement. So on H4, you will notice that price actually came down up. Then this whole push down here actually broke a structure. That's the first thing. So if we run a fib from H4, you will notice that this price can actually continue dropping all the way to this price level, which is around 56, 30, 56, 25. We can drop all the way to 55, 25 as well, based on a higher time frame structure. But again, for this structure to play out, we need price to create a lower low. Then we'll potentially anticipate them to create another lower high before this price even continues down. So remember, price doesn't just fall, it moves in waves. So dropping down to H1, so this is just giving us context on where the market is going. As long as we've got context, I'm sure you also noticed that this price actually rejected with a nice pin bar on the 38.2 fib retracement. So this is bias. As soon as we get bias from higher time frames, we drop down to H1, which is my best time frame. On H1, I'm looking forward to see price trading below the 13 EMA for me to sell. That's the only thing I look for here. If you notice, price actually came down, came back up, came down. Here, this is where I started getting interested, and that's where I shared the signal in the morning. So if you drop down to M15 now, this is where we're looking for entry candles. This is where I also like to run my fib to get an early entry. So I noticed that price is now pushing down, right? We've broken a structure, a retracement, so we could have sold here. We also have the 200 EMA. These are all confluences falling into place, lining up with a higher time frame analysis. Price broke another structure. That's when I came to the charts and I noticed, okay, we are in a trend, so why don't I just run a fib here, see what happens. So when I ran a fib, I also noticed that I had this high, this lower high, and a broken order block. You can see I marked this order block here. Price came there, rejected. That's a sell. This lower high also has its own order block here, which could potentially be retested. So sometimes price will retest, sometimes it won't. It will respect another zone. So here I also had this level here, which was now also broken by this move. So as price was now retracing, this is where we started selling, selling, selling. This push down only showed me that price actually wants to push down. So we scaled in, scaled in, scaled in. What I only didn't like about this setup is it took a long time to play out. Even myself, I was beginning to doubt it. But sometimes they would just like bounce and drop as they did here. But in this example, they went sideways for such a long time. 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. That's about 4 hours, 4.5 hours before they actually shifted the zone and completed this particular setup. You can see price moved all the way to TP2. The setup is successfully complete. The bias, however, from a higher time frame is still bearish. That means most likely, depending with how today's daily candle closes, tomorrow will still come back and look for sales. So once you run your fib, your first entry starts at 38.2. If you are confident about the trade, you start selling here. But stop loss has to be outside the last high. That's one thing you should know. So calculate the pips. If you can hold maybe 2-3 positions, opening them as prices pulling back up, you can do that if you're confident with your bias. If you're not confident with the bias, you wait for price to actually reject the last zone. Wherever it decides to reject, then you wait for them to break an order block. This is where you can enter. Right, they broke another structure and retested, so you can also enter here, 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 another low high, another structure. You could have also have sold from here to here, which is also a good trade. So whatever you know about trading, you just have to apply it. So this video is easy. I'm talking so fast because of time. I don't want it to be long. So wherever you could have sold, you see I'm placing these sell signals. This is not an indicator. It's me placing these arrows manually. I'm just showing you where I could have sold. And you only sell after a candlestick closes. So that's another clue you need there. You need to sell only after a candlestick closes. Sell. This was the last sell. So you can see, based on my trading system, this is where I could have started selling. If I missed it here, then I could have sold here, 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 or here. All these are entry points. What do we have on the TDI? It's confirmations, baseline bounce, confirmation of a sell, baseline bounce, confirmation of a sell, multiple confirmations. As long as the TDI is trading below the 50, you should know it's a downtrend. As long as H1 is trading below the 13 EMA, you should know it's a downtrend. So that's how you use a fib. Every time you see a push down, for example, this first push here, you can still run your fib there into the future. If you notice on this particular one, we came into 38.2. We started actually rejecting there on 38.2. The bad price continues slightly extending. But at the same time, you should know that you've got an order block here. You've got an order block here. You've got a zone here. So at any of those points, price can get into them. There's no guarantee that we'll just respect 38.2. There's no guarantee we'll just respect 50 level. Price can respect literally anything. All we need to do is wait for a reaction. We anticipate price reacts, then we execute. So here we could have maybe entered in the motion of this candle. Then we could have sold this fib like we did, run it again. Here you could have actually run another fib if you wanted to. From this high to this low, extended, price actually rejected around the 38.2 area, which was also a resistance zone based off this order block here, which was broken. So everything you know about trading has to line up. It's not only about using a fib, because you might see a fib and think, okay, the fib is the one making money. Fib is just there to confirm what I already see. You get it? So I hope this example was clear. So like I said, you want to look for trending market. So for example, here you can see wherever you see a nice flow of price, don't worry about missing here. Don't stress. Price will retrace to something. So this example, you see I had this zone marked out. I also had this high marked out. So if you notice, price gave a huge push to the downside, which broke this minor structure right there. So price came, hit, then pushed up. On this push down, you want to run your fib. So from the highest high to the lowest low, then you stretch it into the future. Okay, so what you notice is price actually retraced nicely into the 38, no reaction, into the 50, Then we got a reaction. This candlestick here, that's the reaction we need on H1, right? So for a sell to be safe, you want to be below the 13 EMA. So at this point now, you want to be on M15. That's where now I locate a broken order block. I sell, they retest, I sell again. They drop, I run a fib. They push back up, I sell again. You get it. So as long as you get a trend, you are good to go. The only thing you want to identify, buyers from the weekly, daily, 4 hour, you want to mark supply and demand. H1, you want to confirm your trend for the day if you're day trading. M15, you look for a pattern and execution. That's it. So the same is the same for okay, you might ask, where exactly which time frame do you use? Personally, I use H1 and M15 to run my fib to execute. But as you noticed earlier, I can also run it on H4 just to get a hint of where price might react from. Once I complete that, I want to drop down to my time frames, which I'm comfortable with in terms of execution, which will now be the M15 or even M5 sometimes. But in terms of viewing the trend, is there a trend? Use H1, use H4. Don't use smaller time frames unless you are scalping. You can use the same strategy on any time frames of your choice. The time frames I'm stating are based on my trading system. They are based on my trading style. They are based on my level of patience as well. I'm not a patient guy. That's why I day trade. If you notice, I was already complaining about this setup because it took literally 4 hours to play out. Usually, if you notice, our trades don't take time. Usually in 2 hours, we'll be done if we enter at the right time or if there is momentum in the market. But sometimes price will just do what it wants to do. So if you notice also here, the target was this order block here, which was retested once. This was also a TP right there. So I hope this is clear. I'm just using one thing. You can use it on anything, currencies, commodities, stocks. You can use the same strategy. All you need to do is you need to know your bias. You need to know what your market is doing. Are they trending, ranging, or choppy? Range markets are a bit hard to trade, but the trending market is the best. If you're finding this hard to understand, just go to the Candlestick Bible videos, which we did on YouTube. There is a certain playlist. Go under playlist and look for Candlestick Trading Bible. Go through it all, because I also explain all these market conditions in greater detail, and I also explain how to use the fib. So sometimes you might get a huge impulsive move like this one. You see from this high all the way to this low. Then when the price retraces, sometimes they won't reach 38.2. These are just different market conditions whereby there's so much acceleration in the markets. It's not even retracing into any fib retracement levels. So for this, you need to use other knowledge you know about trading. If you feel like there's a pattern here, then you can execute it if you see it, even though price is not reached here. But if you want to be safe, just wait for price to retrace into the fib retracement levels, then you can execute. The other thing is you can also get more profits if you execute anywhere above the 50 level. Anywhere above the 50, if you're in a sell motion, you get more profits because it gives your trade a less risk and a higher reward. What else? Let's see. Let me open something totally different, something which I don't trade, so that I can show you that this actually works. So we want to look at this particular asset here. This is the 4-hour time frame. You can see we have clear break of structure here, and price is hit an order block. That means for this impulsive move, you can run a fib. That's number one. Second impulsive move came with no pullback at all. This is where an example where there's acceleration. So we're going to see if we're going to get any setup in any of those areas. So already here, I know the bias is bullish. As long as we're trading above the 50 EMA on any time frame, especially if it's a higher time frame, that gives me the bias. I don't even need to look at multiple charts. So from there, first impulsive move, if you run your fib, let me just zoom it in. Okay, I hope I was sharing this all this time. I hope so. But anyways, if you notice on this push up, let's agree that price actually came back to almost 70.5, I think, 70.5 fib retracement before H4 gave a reversal pattern. Then it is from here now where we can start to look for entries. We are also trading above the 13 EMA, agreeing with the bullish bias that played out. The next impulsive move, this low to this high here. If you notice here on this particular example now, let's just drag it into the future. We're just going to stop maybe here. Okay, so if you drag it into the future, what you will notice is price pushed up, then they started retracing. Usually, if price pushes all the way up like this, I sometimes give up on the setups because I know you won't know exactly where they want to pull back to. So these are just variations in the market. You just have to decipher now where exactly can you enter. But if they hit a point of interest like 38.2 and they give you a reason to buy, then you can buy it. But as long as you're trading below the 13, you should actually know that price is still bearish until we come back above the 13 EMA. So here the entry would have formed here, safe entry, by the way. But if you mark your point of interest here, remember it's 4 hour. If you drop down to the M15, you'll most likely get an intraday trade here. You'll most likely get an intraday trade here. You'll most likely get an intraday trade here. Most likely get an intraday trade here. Especially if it's an asset you trade every day, you obviously know how it moves. That's why you see personally, I added them just for a lesson. I was just helping somebody out who trades those assets. But anyways, if you know me, you know I trade C1, C3, C5, B5, B1. That's all. J10, V250, and STEP, I trade them once in a while, and I only trade them on a big account because I'm not really familiar with trading them. So I don't know the risk I can use when I'm trading them, especially maybe on a small account. But if it's on a big account and I see a setup, I always execute. So I hope this fib lesson is helpful. If you want greater depth of knowledge based on this, you just have to join mentorship. Because mentorship, the difference between a normal lesson or just signals and setup, mentorship, we are trading together. If I'm in a session and you're free, we're trading together, right? So I'm telling you the reasons why I'm doing what I'm doing as it is happening. I cannot come to the group and say, okay, now I'm selling, okay, now I'm thinking this. It's a lot of work, especially if I'm sending out setups and signals for free. But if it's mentorship and you've paid, then I can take your hand, then we walk together. You get it? So for each candlestick, you need to know the story behind why are these guys bouncing here. Why didn't they fall? Why did they extend price? You need to know what's happening with price. So for all that, then you need to join the mentorship. Otherwise, if you just follow the daily analysis, you can see I just state how I'm viewing price and how I'm trading. If you take notes from those live sessions, it also helps. But if you can afford mentorship, it's not really expensive. That will be the best way to go, because with mentorship now, I take your hand and it's on a one-on-one basis. If it's multiple guys, we're trading the same thing, we do exactly that. If you're trading something else and you still want mentorship, as long as there's a candlestick or there's candlesticks, I can still help you out. So if you also know those who want to learn, just direct them to this page. I believe this is shared. I've shared this video on YouTube. So that just direct them to this page if they want free sessions. If they also want live trading sessions, they can join us in the morning for synthetics trading. That's live chart analysis. If they just want setups and signals, they can join the Telegram group. If you want mentorship and more in-depth lessons, by lessons, I don't have a written down course yet. I feel like it's best if you teach someone based on live sessions or based on an individual. So I've got time. If it's 10 people, but that's why you also notice that when I say I'm taking people, it's for a limited number so that I can cater for a certain group of people for a certain period. Once they are good, then I take more people. So it's not like I'm going to be teaching like 100 people at the same time. It's usually like 2, 3, 5, maximum 10 at times. But each individual, I try to work with them based on their understanding. Because what you'll notice is it's not everybody who is going to understand how I'm teaching. Maybe you might just pick one thing which I'm teaching, and that will help you based on the other knowledge which you have. So you're not limited to just learn from me. There are many best teachers out there who actually trade better than I do, and you are free to learn from them as well. But if you want to follow how I trade, I day trade, I trade synthetics most of the time. We do trade currencies here and there, but we mainly focus on synthetics. So if you need mentorship, plug in. If you know those who want, pass them my contacts, or those who just want to learn, you can just send them my YouTube link, share with them, then they can learn at their own pace. So I hope this is helpful. H1 must be your best friends in terms of looking for trend. Then once you identify an impulsive move, what is an impulsive move? Impulsive move is something like, let's say price is doing this. Then for some reason, there is a move which is bigger than the rest, right? That's the first sign of an impulsive move. So now you want to see whether they're coming back to bounce here on this broken level here to start creating a trend, right? So this bigger move, that's your impulsive move. This is your pullback or your retracement, another impulsive move. So you can run your fib from here to get a point of interest where you can buy from. Run your fib from here to get a point of interest where you can buy from. So price will either respect a support zone, they will maybe respect a fair value gap, maybe they will respect an order block, maybe they will respect some support zone. But as long as it's in line with some fib level and you get a nice candlestick rejecting that place, you just jump to M15, M5, you look for a confirmation of the pattern, execute your trade, stop loss below the zone, take profit on 1:2, 1:3, or on the next level, which you see from the left-hand side, and you put your take profit and you sit back and you watch your trade play out. Either they will play out or they won't. And out of 10, 100, 1,000 trades, that's when you can determine whether your system is playing out. You cannot judge your system from 10 trades, really. You need like 100 trades. If you just want to trade a fib and you only want to trade trading market, there's nothing wrong with that. Just be patient enough to wait for such setups to happen. Here's another example where we're going sideways, sideways, sideways. We only start using the fib after we break this structure here. So we wait for an impulsive move, then we can run a fib. So after you get a new impulsive move, then you can run your fib. Then price is reacting off the 61.8. Nice rejection there, pin bars in that area. Price is also bouncing off a resistance zone. TDI is also confirming with the bounce of the 50 level. You see, everything you know about trading just lines up. And if it lines up, you execute your trade. If price had decided to continue pushing up, there was not going to be any confirmation here, number one. Number two, price was not going to respect this area. You would have seen it then break, still push up above the 13 EMA, showing that they want to be bullish. So whatever price does, we simply follow. So I hope this session was helpful. I'll try to do another session, maybe using examples on currencies, but the concept is basically the same. And you can still go to the playlists of the YouTube channel, go under Candlestick Trading Bible, then just watch or just read the book. You will see the pages where the author starts talking about the fib. Then you can come back to my videos because these page numbers on the videos. Then you can watch those videos. And then after that, if you still have questions, I can help you out. No charge needed there. But if you need mentorship, like a proper guide, then for that, there is a fee. So that's it from me to guys. That's it from me. Wishing you guys a successful trading journey. Good trading.